Neil Macdonald, our economics reporter, we're going to preview the budget next week and explain where the UK economy is right now. What are you going to tell me?
We're going to be talking about the budget bringing good news for the Chancellor, which is a huge change from where we were just a few months ago. Unfortunately, we're always going to be talking about the fact that it's probably not quite enough good news for him to be able to give out the money to all the different groups who are asking for it.
So, Neil, we're here speaking ahead of the budget in a week's time, and we are going to get onto that and preview that. But I want to really get a sense of where the UK economy is right now and whether all the forecasts were correct. Because if we sort of go back to when Jeremy Hunt first became Chancellor at the end of the Liz Truss government, it was all looking pretty, dire back then, wasn't it?
Yeah, the forecasts that he presented when he did his autumn statement were basically terrible. For example, on economic growth, it was expected that the economy was already in recession by the time he was speaking, and the recession would last for most of this year. And there were other people around, like the Bank of England, who said the recession was going to go on for 8 quarters. And if that was true, that would have been the longest recession on record. And a lot of things went along with that. So people's incomes were expected to fall very sharply. Energy bills were expected to go up a huge amount, and the government was expected to spend a huge amount covering some of those energy bills for people.
It was all looking pretty gloomy, but where exactly are we now? Because isn't the sense that ahead of this budget, it may not be as bad?
Absolutely. I mean, it is a dramatic turnaround, is the reality. And in some ways, it's going to make his life an awful lot easier when he steps up to do the budget. We can talk a little bit about ways in which it won't be so easy. But the recession hasn't started. And you can find people in the city now who say there isn't going to be any recession at all, which is quite extraordinary. Energy prices that were sky high have dropped spectacularly. I mean, dramatically. They've dropped by almost like 90%. And again, we can talk about the implications of that a little bit if you want. And all the things that flow from that. So, for example, the likelihood that unemployment is going to shoot up, for example, again, now people are quite confident that possibly that won't happen.
Are all the issues to do with the state of the economy going back further than that? Because I think we get obsessed with the mini budget, but also there was post-COVID, but even before COVID, the war in Ukraine, the economy wasn't that great.
Definitely. The context to all this is that the British economy has performed badly for a decade. So if you go all the way back to the great financial crisis of 2008, when banks across the world were collapsing, banks in this country had to be rescued at vast cost. After that, the British economy recovered, but recovered very sluggishly from that. Just to give you a sense of the difference, prior to the big financial crash of 2008, the economy was growing around about 2.7% a year. Afterwards, it's managed sort of more like 2% a year. Now, that may not sound like a huge difference, but the problem with growth is it's about this year, next year, and the year after. Yeah. And even quite small differences in growth rates can add up over time. But then on top of that, we had the Brexit shock. Obviously, that's a hugely contentious issue. Some people see Brexit as the opportunity for the British economy to break out of the doldrums. Others say it's caused a lot of problems. One of the issues they particularly focus on is the impact it's had on business investment, which has been weak since the referendum. And obviously that's all been compounded by the fact that we left Brexit, but we didn't leave it cleanly. That was merely the trigger for months, if not years, of negotiations, and a period when business didn't really know the basis we were going to be trading with the European Union on. And then on top of that, COVID came along and triggered a downturn which hasn't been seen in this country for 3 centuries, and a downturn that was much more serious than a lot of other countries. And then, political chaos for most of last year, I think it would be fair to say, culminating in the Liz Truss government and its ill-fated budget.
Now let's just remind ourselves of that mini budget back last year. Liz Truss had big plans when she became Prime Minister in September. But of course, the death of Queen Elizabeth II briefly put that on hold. And so it wasn't until the 23rd of September that her Chancellor, Kwasi Kwarteng, stood up in the House of Commons and announced the growth plan, aka the mini budget. It cut income tax and the top rate of tax, and reversed plans to raise national insurance and corporation tax. Truss and Kwarteng saw this as a proper Tory budget, the biggest tax cut since 1972. Everyone else saw it a little bit differently. A run on the pound, a huge rise in government borrowing, and worldwide condemnation, with the IMF warning the government against unfunded tax cuts. And so, in a short amount of time, the government reversed all of it, sacked Kwasi Kwarteng, replaced him with Jeremy Hunt, and then came the end of Liz Truss herself, the shortest prime ministerial reign ever. But let's remember, the economy wasn't doing that great before then either, or even for a long time before that disastrous September. So even if things aren't as bad as they were perhaps forecast a few months ago, we're still in that similar sort of story of the last decade of just sort of sluggishness.
Yeah, that's right. And I think there's a sort of general agreement that the British economy has been performing poorly and something needs to be done to try and shock the economy out of it. And I think that, bizarrely, is a view that Liz Truss and Kwasi Kwarteng would share with Jeremy Corbyn and John Macdonald. The system as it's set up isn't working. Something needs to be done to change the system. Of course, they have very radically different ideas about what that might be.
When you say there that we appear to have sort of come out of COVID, especially compared to our European partners, differently, I mean, if things are slightly better now, are the forecasts for other countries even better than ours?
How countries do against each other is obviously shifting all the time. Yeah. What we can say is that the British economy today is still smaller than it was before COVID and the lockdown ever began. Yeah. So we compare us now to where we were back in sort of December to February of 2020. And we're the only G7 country of which that is true. And I mean, so like countries like Italy are bigger than us. Italy often seen as performing poorly. Countries like the United States and Canada significantly bigger than they were. So that I don't think can be disputed, that we have found it much harder to get back to where we were. And that's something we still haven't achieved. It is worth bearing in mind that also the hit we took, the decline in output when the lockdown happened, was also very bad. It may be simply that it was just a very big shock to the system here and we struggled to ever get over it.
Going back to, looking ahead to the budget, I mean, do we get a sense of if things aren't as bad, and that therefore means that the government has presumably a bit more money to play with, do we understand how much more money?
Well, there's forecasts. This is a game where there are forecasts about forecasts, which are probably equally accurate. So for the current financial year, obviously we're 10 months through the financial year, so we've sort of got a pretty good sense of where we're heading to. And on the current pathway, we're probably going to borrow around about £30 billion less this year than we were expecting. And that's a significant amount of money.
Is one of the main reasons that we are borrowing less is because of what we've seen as the fall in gas prices?
Yeah, so the fall in gas prices has been both dramatic and one of the biggest story in the British economy over the last 6 months, and has massively changed prospects for our country and for everyone in it and the living standards of people.
Is that because of something we've done or because of something Europe's actually done?
No. So, I was thinking about this. I mean, one quality I think chancellors probably need is luck. And on that basis, Jeremy Hunt is a great chancellor because things have really come to his aid. And they are things which he has not controlled. So European gas prices have plummeted. I think they're down like 85 or 90% from where they were last summer. Why has that happened? Well, partly the winter in Europe has just been quite mild, and that's really helped. And also, Europe did a great job at the start of the winter of filling up their gas storage facilities. Basically, the big fear was this, that Russia was cutting back the gas it was supplying to Europe. We would go into the winter with not much gas in storage. You get some cold snaps. Gas storage levels would plummet, and we'd go out and start to try and buy gas on the world markets at basically whatever price anyone was going to charge, and those prices were going to shoot up. And that has not happened. The storage facilities were filled with gas, and because the winter was mild, we haven't run them down as fast as we might have done. There's been another factor in there, by the way, which is also demand for gas has fallen. Consumers across Europe have unsurprisingly reacted to the fact that it's very expensive by consuming less of it. But those things have really helped. Those things have not been British government policy, but they've really helped.
That's a good point to sort of move on then, if we're talking about sort of energy prices, to move on to what we might expect or guess here when it comes to the budget. So why don't we start by talking about the gas and electricity bills? I mean, what has the government already done to help households out, and what could he potentially do now?
Well, this is an area where Jeremy Hunt might want to reverse one of his own policies, as opposed to all the policies of Kwasi Kwarteng that he reversed last year. So there is this policy called the Energy Price Guarantee, which effectively freezes gas and electricity prices for domestic customers. And that is designed to ensure that the average household bill would be £2,500. Really important, that's not a freeze on the size of the bill. You can still pay more if you consume more. That was a very expensive commitment because effectively the British government was stepping in and saying to every household in Britain, we're going to protect you from whatever happens to international gas prices. So they could have gone all over the place, and the British government was saying, we will cover that. And that could have been a very big check. And as we were saying, that it's turned out not to be as big a check as they thought. But so the plan was, come this April, that energy price guarantee would go up from £2,500 to £3,000. Now, that, of course, means that households across Britain would be facing the prospect of their bills going up. There's strong expectation that Jeremy Hunt is going to stop that happening and keep the guarantee at £2,500. There's a particular reason for that, apart from the obvious benefit of, to households and therefore protecting their incomes, protecting consumption, protecting the economy. And that is that straightforwardly, it's a much less expensive decision to take now because gas prices are falling. It's thought that by the summer of this year, average household bills will be around about £2,100. So it'll actually be below the freeze, below the guarantee, and therefore it will not cost anything. So you could be talking about a decision which just would cost some money for 3 months, but would of course be fantastically popular with people.
What's the other issue you think he might act on, which is fuel duty?
Fuel duty, yes. So again, this is something that could be very popular with people. Here again, it's a decision taken this time by Rishi Sunak when he was Chancellor. You go back a year and Mr. Sunak cut fuel duty by 5 pence. At the time, petrol and diesel prices shooting up because of the war. And he said, look, I'm going to cut duty by 5 pence, give people some sort of support. But it's temporary. It's for 1 year.
Yep.
And that means this year it's going to go back up by 5 pence. Except there's also another government policy which has been in place for years, which is that fuel duty should be increased each year, basically in line with inflation. If you put those two ideas together, you're looking at a huge increase in fuel duty, an increase of 12 pence, about an increase of like 22%, which is massive. It's obviously going to hit anyone who drives a car, fills up their tank. They're going to see that. The problem is that the way the public finances work is that the people who do the forecasting of our public finances take government policy as they've been announced. So they've penciled in that extra revenue. So if the Chancellor wants to take it out again, he's got to find that costs him money, if you like, and it's going to cost him about £5.5 or £6 billion. But I think it would be, obviously a very popular measure certainly with a lot of backbenchers who've been demanding that he must do that.
If you pinpoint those two issues there, the energy bills and fuel duty, and you say that those are two popular political moves, is this about politics then? Are those measures about pleasing certain people, and obviously they will help households, rather than perhaps do they deal with that issue that we were talking about earlier, which is a stagnant economy and growth?
They both support people's incomes, and therefore, on balance, you'd expect them to help economic growth. And clearly, the British economy, though it's doing better than expected, is not exactly booming at the moment. And so there is an argument for saying we should provide some support. There is, of course, by the way, a counter-argument to that, which we could get into, which is we also have very high inflation at the moment. And some people might say pumping money into an economy when inflation is only just starting to come down is a bad idea, not least because it will encourage the Bank of England to put up interest rates.
What would Jeremy Hunt say?
And so, it's very interesting on this because Jeremy Hunt's sort of official position is we will do everything we can to support the Bank of England in their battle against inflation. And the argument about, does handing out money make inflation worse is one of the reasons why he said he hasn't been willing to provide more money to public sector workers. The increase in bills is enormous, and there is a case for doing something about that. And as I say, there's probably a case for doing something about it further, even if they don't allow bills to go up in April.
And, you mentioned there about public sector pay, and I think we should therefore talk about this because we have seen for the past number of months, a wave of strikes across various professions. And as you say, the government is going to have a bit more money to potentially give out here. Where do you think it stands, therefore, in potentially having this, 30-odd billion to play with? Where does it stand in terms of addressing the demands of public sector workers who want higher pay? Now, these strikes have been going on since last June when the first set of rail strikes took place. Since then, a whole host of workers have taken to the picket line. Nurses, ambulance drivers, teachers, postal workers, university staff, barristers, firefighters, all striking over pay and conditions. Now, there have been some deals and there are still discussions. Ambulance worker strikes this week were suspended after they re-entered talks with the government. Firefighters recently accepted a new pay offer, meaning that new strikes won't take place. But there could still be more strikes to come. For example, consultants in England said they were ready to take action unless they reached a new pay deal. And there are more strikes coming next week, including on the tube.
The issue here is about how long is this improvement in the public finances going to last? And that's where Jeremy Hunt may get into difficulties, because the view is that borrowing is lower this year and next, mainly because of factors that may not get repeated into the future. The thing about increasing public sector pay is, of course, it's a decision that is not just for this year or next. I mean, if we decide to pay teachers more this year, they're not expecting to lose that in a year's time, that they expect that to last into the future. So every decision you take about public sector pay commits you to more spending effectively forever into the future. I mean, one way around that, of course, would be to offer people bonuses, just one-off bonuses. I'm not sure if that would fly with public sector workers, so it may not be worth exploring. So, I mean, to give you one example, in the next financial year, the expectation for inflation is it's going to be around about 5.5%. The government's currently talking about a pay offer of around 3.5%. Now, that would mean all public sector workers, if that was the terms, would be worse off in real terms. If you wanted to turn that 3.5% offer into a 5.5% offer, so make sure that they at least match inflation, probably going to cost you about £5 billion. Now, in the context of 30 billion less borrowing, that sounds easily affordable. But the thing is, that would be £5 billion this year, next year, or after. And there is a strong expectation that the people who do the forecasting for the public finances, they're called the Office for Budget Responsibility, the OBR, body set up by the Conservatives, they are going to be more pessimistic about Britain's long-term economic growth rate. Mm-hmm. And the thing is, there's a very close relationship between growth and tax revenues. And so if they're more pessimistic about our growth, it probably means they're more pessimistic about our tax revenues. So it may be the case that they say, you've got a bit more money to play with now, but actually in 3 and 4 and 5 years' time, you don't have any more. And if that's the case, from the point of view of Jeremy Hunt, justifying higher public sector pay is going to be very difficult.
We seem to have got over the last few months, year, okay-ish, but there are concerns about Britain's long-term growth. And a lot of that comes down to this fascinating issue, really, about there are fewer people working, and especially those over the age of 50. Can you just explain some of that?
Yeah, this is the great mystery of the missing workers. It's a phenomenon that appears to have affected Great Britain more than other countries, and the effect appears to have persisted in this country. So after COVID, after the lockdown, there's been an increase in the number of people who are saying they're economically inactive. It's gone up by more than 500,000. And of those people who've become economically inactive, more than 60% are older, 50 to 64-year-olds, and more than 60% are saying that they're long-term sick. Now, this matters because one of the things that determines how fast your economy can grow and how big your economy is the number of people working in the economy. The problem with this is there are so many competing theories about what is causing this, and obviously that complicates knowing what to do about it. So, for example, after COVID struck, one idea was what's called the Great Resignation, where the idea is that people sort of reassess their lives. Maybe they got ill, maybe they saw friends and loved ones get ill and maybe even die, and they suddenly thought, do I want to spend the rest of my life in an office? Why don't I sell my house and, move to the countryside and do something different?
One of the themes seems to be this idea that COVID and the lockdowns seems to have proven to be a big shock to our economy and a bigger shock than others felt. And I can imagine there are a lot of people saying, well, I know what the big difference between us and other countries are, Brexit. Do we have any sense of where that fits into where we are right now?
There is a view that Brexit has had an impact on the economy, really, I suppose, in two ways. One is through investment. So if you look at business investment, it does weaken around the time of the referendum. Yeah. There are those on the side of campaigning for Brexit who say it's a bit misleading, the statistics aren't quite right. The figures just before the referendum were quite strong. But it sort of makes sense because obviously when Brexit happened, there was this uncertainty about the way we were going to trade with the European Union. And obviously you can see the argument that a lot of big companies, perhaps, for example, in car making or chemicals, might turn around and say, actually, I'm going to put some investment on hold for a while. The other argument is about trade and whether the fact that trade between us and the European Union, who do make up about 45% of our exports, has become less free, less open. Most economists would tend to assume that would probably have an impact on your productivity growth over time. And the Bank of England has always argued that probably would be a consequence of Brexit. And their thinking is currently that appears to have happened quicker than they thought it would. Mm-hmm. So the view was that this would sort of unfold over some years. There's a sense that maybe it's happened very, very quickly.
If there have been all these forecasts and these gloomy predictions, the doomsters and the gloomsters, as Boris Johnson would call them, should we question more than economic forecasts if it seems that we're doing slightly better? Not to sound like a sort of a Liz Truss or a Kwasi Kwarteng and say, I don't care what the OBR says or whatever, I'll go my own way.
I think it will definitely raise that question in the mind of a lot of MPs who are already sceptical about the Office for Budget Responsibility. The key issue that's going to hit the Chancellor is this, that the OBR may well say, in 5 years' time, we think the UK economy is going to perform less well than we thought. It's going to be weaker growth than we thought. And that will mean that our public finances are in a weaker position than we thought. Quite clearly, someone can very reasonably say, hang on, you just got your forecast for the current financial year that we are in right now wrong by 30 billion quid. Who cares what you think about what's going to happen in 5 years' time? And the argument of Liz Truss and those around her, it seems to me, is that the problem with this approach is that we commit ourselves to doing things to hit a target in 5 years' time that are in fact damaging to us. Mm-hmm. So, for example, deciding to put up corporation tax, which is something that's going to happen in April. Put up corporation tax to raise more money to balance out the government's revenues and taxes.
Does that mean that they tie the fact that the economy's been sluggish since 2010 to the fact that the OBR was set up in 2010?
I would say it's a bit more than that, because I think that they feel that the government hasn't been radical enough on a whole number of issues, like, for example, planning. I think where the OBR and its defenders might step in here, and they might say, well, it's all very well to sit here and say we're going to do, reform of planning and say this is going to make the economy boom very rapidly. But is it really? We're a bit more sceptical about these sorts of things. And that relates, by the way, to, for example, if they want to do changes to childcare or changes that might help people back into work, you might sit there and say, look at this, it's going to be amazing, it's going to solve all our problems, therefore the economy will grow faster, therefore we'll have loads of money. And the OBR sees its job maybe as saying, hang on, let's actually run the slide rule over this. We may find, it's not going to produce quite as much money as you thought. And I think there's still a sort of central argument, if you like, which is if we want to spend more money on something, be it, for example, social care, which is what Boris Johnson wanted to do, or defence, or paying public sector workers more, do we do something to raise the money to pay for that, putting up taxes in some form, or do we just hope that it will in some way make the economy grow faster and that will produce the revenues that we want? And I think the OBR's argument is that unfortunately, when you look at the experience of lots and lots of countries over lots of time, you probably need to find the money to cover it rather than just hope it turns up.
Neil Macdonald, thank you very much for talking to me.
Thank you. Pleasure.